Okay, welcome to ICE OpenFX. My name is Ezra. So in this live session, I'll be breaking it down from our technical and order flow to try and explain uh, the next impulsive move we are expecting on this particular pair as what a recap, right? So stick to the video while we explain everything that you need to understand and all. So this is GPP USD. On this time frame, you can actually see that the pair is bearish, fully bearish. So you can see market creating little uptrend. The main impulsive wave in the market is totally what bearish. So this will tell you that we are bearish on the pair. So since we are bearish on the pair, you just have to what focus on the recent structure created. On the recent structure created. Now, with time we'll be talking about quote data, how you can actually use quote data to uh, take your order flow from higher time frame, let's say for example monthly time frame, weekly time frame, daily time frame, H4, then why you do the magic on lower time frame, basically intraday time frame. Sorry, it's not magic, so it's purely hard work. So but the main thing is understanding what you are actually doing. All right, so now on this time frame, we actually seen that market is bearish. Market has already traded into this monthly what high based on this time frame. This monthly high, it traded into the what? Into the POI, point of what interest. So since market has already traded into the point of what interest, what do you actually expect market to do on this particular time frame? So what you expect market to do on this particular time frame is what to give you what we call intent on lower time frame. On intent on lower time frame. Now I will explain what we call intent basically. All right, so intent means having a POI first. Now before you have a POI, you must understand your order flow, you must understand your structure, your inducement level, an area you're expecting market to what to give us what either a bullish continuation or a bearish continuation. So you must be aware of these things. Now after that, you have a POI, a level that you expect market to trade into. Now let's take for example this is a lower low, here a lower high created, right? So you expect market now to create a lower low from here. Let's make it clean. I prefer black. All right, cool. Now this is our POI. What you expect market to do here, if this is monthly structural low or monthly old low, and this is our old high, and this is our structure point high, that is like a strong high. You're not expecting market what to raid. So since you're not expecting market to take this high, that means it's a strong high, a protected high. Now since you have this high as a protected high, what do you expect market to do here? You expect something like a range structure formation. After that, with mitigation, which is basically mitigation is deeper than what you actually think it is. All right, so now you expect market now to give us what a retracement into this POI. So since this is the possible move that market will use around this time frame, if market now trade into this POI, the idea of intent is to have what a confirmation that will give you a concrete bias that will flow with what monthly is telling you. Now let's say for example, as market now trade into this monthly POI, what you expect on daily, note I said daily, not weekly nor H4, what you expect on daily time frame, it will be visible on daily time frame as it trade into POI, the refined POI. Now you will expect market now, let's say for example this is the last low created on daily time frame, it traded this high, so you must make sure that it traded high to give you a what a well confirmed intent. Now after market now rated this high, it traded into this POI, then come back and what break this low. As market break this low, Coming back here is what we call entry given. So market come to give you what? Entry. So this will be your entry from here to the downside to expect market now to read this external liquidity. So what you have to do is that as market has given you monthly being bearish, now let's say for example weekly gave you what? A bullish move here. On daily time frame, you have to watch trade in continuation of what is happening on monthly time frame. Those are the basic things that you have to understand in what we call time frame difference. Right? Those are the things you learn in our mentorship, which we do every time. Right? So now here is our intent. So from this intent area is where you will look for what? Point of interest on lower time frame again to take entry to target monthly low. You can even take entry on M5, that is on the intraday time frame, and target monthly low. Though that is kind of long, but if you have the patience, you can do that. Right? So that is that on intent. So now let's talk about outlook on this pair. Then we'll use the same thing that we just learned to explain what you want to see. All right. So from this time frame, you can actually see that the pair is bearish. Since the pair is bearish, we are already trading to this monthly low. So what do you expect here? Market can actually give us what? A rejection at this area. Now you have to what? Wait for what? A possible move on intraday time frame or on daily time frame that will confirm that you will what? Expect a retracement before a continuation. If that what retracement is not given, or that reversal move on lower time frame is not given, that means this low will be taken with ease. So one thing about market is that you react, neglect about your what, your forecast or your prediction. All right. So the main thing is what? Reacting to market. That is the main idea in trading. So you will react to what market will tell you around this area. If it will give you a corrective wave to the upside, that is a little retracement on lower time frame or continuation. So those are the possible move market can actually give us here. Now our forecast on this particular pair around this area is that we expect market now to what? Give us what? A reversal move on lower time frame. So if you're following us on channel on Telegram, we'll be updating most pairs as what outlook within the week. So either maybe 3 or 4 pairs, and we'll be posting it here on YouTube. So you'll be seeing it live and direct, so that you can actually be what? Having a concrete what? Idea of order flow. So you can actually have order flow. Then we have to mark some point of interest. Then the only thing you have to do is just look for confirmation, then have a concrete idea of mitigation and other stuffs on lower time frame, on intraday time frame, to join the trend. That's just all you have to be doing. All right. If you'll be following us on the pairs that will be trading and on the pairs that will be what you'll be analyzing here on YouTube. So that's that. So on this monthly time frame, we are fully bearish. Since we are bearish now, you have to what? Look at what? Weekly view, or what weekly is telling you now. On weekly, you can actually see that the view is very, very clean and straight to the point. Lower low, a lower high, a lower low, a lower high, a lower low. This clearly tell you that the order flow on this weekly time frame is bearish. All right, since we are in what? A bear market, there's no magic that you have to do here. So the main thing is what? Joining the market, joining the what? The trend, which is what we do regularly. So joining the trend. So the next thing is what? Note your what? Your recent low, the former low with your recent low, which is this low. So since you have already noted your recent low, if this low is not taken, if this low is taken, then the next thing is what? You expect what? A bearish continuation around this area until market give you what? A visibility or a possibility that it will what? Go up for what? A retracement into what? This area, to fill, maybe to fill this area. After that, a bearish continuation. So on this weekly, we are still bearish. You have already noted your range from this low to this high. This is your range. So that is where market is coming from. So on daily time frame, the order flow is fully bearish. You can actually see what market is actually doing here on daily time frame. After breaking this low, it creates what? A range structure. Now, the idea of creating a range structure should be what very easy, because I've what explained most things that you needed here on YouTube. So the only thing that you have to understand is what we call time frame difference. Understanding the time frame that market is actually creating the range structure. That is what a major point. All right. So now, since market has already traded into a POI, basically a refined sponsored candle. So since this is a refined sponsored candle, market got to that POI, it gave us a minor break of structure. All right. So you have what a minor break of structure here. Since we have a minor break of structure, what do you expect market to do? You expect market to what? To be bearish. That is the simple idea. There's no magic there. All right. There's no magic right here. So the main thing is what? Since you already know that market will be bearish, you follow what market is actually telling you. All right. Let's go lower. Please see it more clearer. Now, since market has already traded into this area, we see a minor break of structure at that POI. Now, this POI that market traded into, this has been my what? My view throughout what? Last month and this month. I've been expecting this major move just like this, even in my what? In my private what? Discord. So we have been following this trend exactly just like market predicted, or just like the market played out. All right. So now, since we have gotten a minor break of structure at POI, intent will be given on lower time frame around this area. So the idea of intent is what? Most of the times when intent is given, you first take a what? Entry. Intent always happens before a minor break of structure. So minor break of structure will give you a general idea that we are fully bearish. All right. So after being that fully bearish, then you have what? Your minor break of structure before market will come and take what? External liquidity. So on this time frame, this is what? A low, just like what we explained on weekly time frame. So this low on monthly time frame, I want to say this low is already giving us what? A rejection. So this is telling us that on intraday time frame, that is minutes time frame, the market can actually give us what? A corrective wave to the upside. Then after giving us that corrective wave, we expect it not to what? Violate what? Some major or protected high. So you should understand the idea of a protected high. All right. So the main idea of protected high is to understand what we call mitigation. So once you have that idea of mitigation, then know the high that must be protected, not a range structure high. Then from that you will expect what? A bearish continuation. So once you have that bearish confirmation on that lower time frame, you expect market to what? To come and raid this low. That is just the simple process in following a trend. So since we have here a minor break of structure, what do? You have to what? Note your what? Internal structure POI and your primary POI. So looking at internal structure, you can actually see here we have internal structure around this area. Now, after having internal structure around this area, there is what we call internal structure liquidity, noting the one that market will actually take, that market will not respect. So example of it is this high, is what? A liquidity high. Why? Because what? It didn't give what we call a perfect mitigation on lower time frame. So because of that, you will expect market to read it as liquidity. So that was why we marked this area as a POI for internal structure and mark this higher prices as another POI for what? A bearish continuation. So don't worry about the markup. I will in the next video about forecast on good. I'll be sharing the view just like how I predicted it on my Discord chat lab. Right. So now, since this is what your bearish area, market has already given us what? A minor break of structure. So you're expecting what? A corrective wave to the upside. So what do you have to do? You have to what? Go lower to what? To intraday time frame. So coming to this intraday time frame now, you will see what market did. Market traded into that POI, created a higher high. This was a momentum move caused by news. So market created a higher high, higher low here, a higher high, broke this low. Perfect intent, giving idea that you continued what the bearish structure. So after the intent, now because this time frame is still high and the stop loss will be high also, so I don't always take a huge stop loss like that. Most times you do see it. Sometimes, unless maybe the candle that I'm actually looking at is very big, then I can actually have more than 5 pips stop loss. So most times my stop loss is not more than 5 pips. So occasionally will you see me using 10 pips max. Right. So now looking at what market is actually giving us here, you see market giving us what? A corrective wave to the upside. It created a higher high, a higher low, rated this high. Now after rating this high, it rated it with speed. After rating it with speed, it got rejected instantly. So this type of rejection actually shows a shift of what? Structure. So since you have a shift of structure here, market now created what? Now let's go a bit lower to see what market actually did around that time frame. Now looking at here, market now broke this low, higher high, higher low, higher high, broke this low, create a lower low, a lower high that did not go and mitigate structure. So since you have this area as a range structure based on this time frame, you're not expecting market to induce it. Why? Because there's nothing that caused what? That caused this pullback for market to what? Induce liquidity. So there must be a reason for market to induce liquidity. Market don't what? Go and induce liquidity anyhow. All right. So because this is what? A lower low, a lower high, a lower low was created. So the next thing is what? Your entry level, targeting, putting your stop loss above this high. Most times I do add 1 pips because of what? Spread and all those stuff, brokers manipulation. All right. So since you added already, let's say 1 pips or 2 pips, depending on the broker you're actually using. So you will take your entry. Even if you want to even refine this area, you can actually take entry on seconds or a minute time frame. A trade that you actually take profit on hourly time frame. So after taking your entry, if you are a swinger, you can actually hold your trade. If you're a scalper, know when you will what you take your profit and wait for the next entry. The same thing, you continue doing it over and over. So looking at this time frame, after that, based on our view, we expected market now to what? Come and what? Rate this low. This was our first TP. Why? Because we have to play safe. We have to play was safe. So after that, this was a clean bearish trend. After that, we have a minor break of structure here. Intent minor break of structure before BOS. So after that, it created a lower low, lower high, a lower low. Inducement. This high here, this mark, this line you actually see here is what? Inducement. So from that, market use it to give us what? Another entry. Intent on lower time frame again. Let me show you the intent. Now look at it. After market traded into the POI, the main thing is what? You wait for market to what? To raid a low. So market raided this very low. Then you have your inducement high here. So after having your inducement high, you have to wait for what? Higher high, higher low, higher high. It created a lower low. The same thing, inducement. This is a perfect idea of reversal. When market trade into a POI, let's say for example you have a POI like this. A market trade into this POI. The next thing you expect market to do is this, something like this. A break of structure, create what? Inducement low. Then market come and what? Induce it and give you entry. This is a perfect entry. So using this high as what? Inducement, then it will create inducement low. Using this high as as intent, it will create inducement low, create a higher high, then come and what? Take it before what? Expansion. This is a clear reversal move. Another one is what? Basically, the only difference is what we call mitigation. The only difference between this first one and the second one that I will draw now. So let's say for example you have a lower low, market creates something like this, give you intent. So there must be what? A perfect mitigation that happen here. So once there's a perfect mitigation, you won't expect this low to be taken again. You expect what? A clean continuation of the structure to the upside. So you expect what? A clean continuation of the structure to the upside. So this will be your what? Your POI. So once you have your POI clearly intact, then you expect what? Impulsive wave to the upside. So that is the idea of intent and entry around that area. Now market gave us entry here, then setting your stop loss just right above this high. Why did I do it like this? Because it was because of what? Broker. So you always do that to what? Keep your account clean. Now from here we have a lower low created. Market broke this low and also broke H4 low, which is this low. So since market has already taken this H4 low, the next thing is what? Your nearest what? Internal structural mitigation. So this was a clearly live session that I took, and I do that every Thursday in my private community. So this was a clear live session. Market traded into POI. We waited for intent. After intent, it created what? Your a high for inducement. This high here. So after creating that high for inducement, market came instantly induce it, traded into the what? SC candle. That's a sponsored candle, and give us what? Expansion to the downside. So the main thing is what? Catching the expansion, not trying to catch the whole move. All right, catching the whole move is quite uh possible. I won't say easy because there's nothing actually easy in trading. All right, so but it's very possible catching the whole move. But the main thing is what? Being in the impulsive move. So since market has already now given us what? A clear bearish trend around this area, what do you expect market to do next? The next thing is what? You have to what? Wait for what? A clear sign of what? A rejection on this, on intraday time frame. On intraday time frame. So after that clear sign of rejection on intraday time frame, then wait for market to what? Give you what? Either confirmation around this area. You always wait for that confirmation so that you will not trade what? Market will not trap you in the opposite side of the market. So now, after market gives you that confirmation, the next thing is what? To the downside. So if no confirmation, you wait for market to what? Give you entry, you join the trend, then you wait for market now to what? Give you what? Another bearish continuation from this particular area. So this will be your next move. So our next area of interest where we are expecting majorly main expansion move, either after market take this low, we'll be doing this regularly so that you'll be following us and be taking entry on lower time frame. So majorly I'll be helping you in order flow and point of interest. Some major point of interest. Note, I won't mark all point of interest. I'll just mark the major ones where mainly either main range structure will form or a protected high will be formed. So those are the point of interest I'll be marking for you. So those other intraday time frame POI, I won't be marking it out for you. All right. So now since you have this, the next area we expect market to trade into is this POI. This is a clean POI. So after having this POI, we have what we call another here. We have this POI. Note, if you are following us regularly now, I'll be explaining everything. This POI is mostly for what? A little corrective wave. Corrective wave. So that is that in today's session. That is that for today's session. So if you want to understand better on how I trade and how you can actually catch a swing trade on lower time frame that will what? Explode on higher time frame. So you can join Ice Open FX on our Telegram. Follow us also on Instagram and all other social media that we open. So in Ice Open FX, in a private mentorship, so I do provide vital information uh, on how market moves. Most of the things I give almost 40% here on YouTube, so you can actually work on that if you don't actually have what it takes to partake in my mentorship. Then beyond that, the main thing about trading is what? Psychology. So you have to work on your psychology, work on risk management, have a trading plan, your trading journal, and overall discipline. And another thing that is very, very vital in trading is what we call experience. So there are some things that even if they teach you 100 years, you must experience it before you become perfect in it. The same goes with what? Trading. So there is that relationship with what? With experience in trading. So build that. That's all for today's session. Good luck.